Welcome to Motley Fool Money. Thanks for being here. I'm your host, Chris Hill, and joining me in studio this week from Motley Fool Inside Value, Joe Mager, from Motley Fool Income Investor, James Early, and from $1 Million Portfolio, Ron Gross. Gentlemen, good to see you.
Good to see you, Chris.
Earnings Palooza rolls on. We've got the latest results from Microsoft, McDonald's, and more. We'll get an in-depth look at the battle for the living room with journalist and author Gina Keating. Plus, as always, we've got a few stocks on our radar, but we will get right to the earnings, and we're going to start with Google. For the second time in a year, Google's quarterly earnings came in lower than expected. The big excitement, however, came on Thursday when the results were inadvertently filed with the FCC and made available to newswires in the middle of the trading day.
Is that a big deal?
That's kind of a big deal because shares fell about 11% before trading was halted. It then resumed later in the afternoon. Joe, I'll just start with you. The excitement aside, what did you make of Google's quarter?
Well, the headline looked terrible, and I was about to head out for lunch when I saw this spilling across Twitter, and I was like, no lunch today. The results...
You couldn't eat lunch?
I did much later. No, I'm a Google junkie. So much later, having gone through the numbers, I think they were actually much better than the headlines would have let on. Analysts were upset that they missed on their revenue guidance, or at least didn't hit analyst expectations of what sales would be, but it turns out that the entire reason they missed was because of foreign exchange headwinds, which is basically a short-term thing, doesn't reflect the underlying business. And a lot of people were worried about cost per click, which is Google's revenue per click, falling 15%. But again, after you back out the currency changes, it was only 8%. And when you factor in that they drove 33% more clicks, all in all, it was actually a pretty good quarter, even though the headline coupled with the accidental release was just a total train wreck.
Yeah, Ron, it was a pretty good quarter, as Joe says, and yet $18 billion worth of market cap vanished. So it couldn't have been that great a quarter.
Every quarter it's all about mobile cost per clicks, mobile cost per clicks. When are analysts or investors going to figure out what's going on here? It's not a surprise to see these things. So when the market gets surprised, it makes no sense, and it's just, to me, an indication that the market is not always efficient. Having said that, the stock was not really cheap. Yeah. And any kind of shock to the system, whether it's a media snafu, public relations snafu, or an operating snafu, will bring the stock down. It's getting down to the point where actually we're going to start taking a look at it again. We've had it on hold for a while now, but now it starts to get interesting.
James?
I'm still trying to see how they didn't wet the bed here. I mean, it seems like the ads, 33% more ads, but ad sales growth was 15% versus 39%. Is that all, Joe, is that all currency, or do they have some just organic slowing?
So what's happening is that basically the PC side of the business, so searches on PCs, is not really growing, but all these extra clicks are mostly just coming from mobile devices, usually smartphones and tablets. The problem is that they're getting a lot less money per click on those because people don't spend as much money on their smartphones as they do on their PCs. And so that's hurting the average, but it's bringing up the overall revenue. I feel like analysts who are focusing on cost per click falling are kind of missing the forest for the trees there.
Joe, just to wrap up on the stock, to the point that Ron was making, when you look at the valuation of the stock now that it's had this 9-10% sale, what do you think in terms of the valuation? Is it attractive?
Yeah, I like it, and I'm a happy holder. I mean, I think they're doing incredibly well. I think the mobile business is booming. They said yesterday they're doing a run rate of $8 billion in revenue annually, which is a pretty sizable amount. And Google Plus, which we always like to make fun of, now has more than 400 million people
users
who have registered, and not monthly or even daily, but broadly speaking, it's been a pretty good success at getting people more brought into the Google ecosystem, and I think that has long-term value.
Thank you. And thanks for reminding people that Google Plus still exists. Earlier this month, hedge fund manager David Einhorn made the case for shorting Chipotle stock. And Ron, David Einhorn's got to be feeling pretty good because shares were down more than 10% on Friday after third quarter earnings came in lower than expected.
Yeah. Customer traffic has clearly slowed, and I did my part, so you can't blame me. I like myself a burrito as much as the next guy. But same-store sales were 4.8%. That's actually not so bad in a vacuum, but it's clearly
that's a drop.
It's a drop, and it's kind of a trend. We also will have rising commodity costs, rising food costs that could potentially be a drag going forward. We didn't necessarily see it yet. Operating margins were actually up. But when their costs go up, then they're kind of left with the decision. Do they also raise prices to the consumer, so per burrito the consumer will pay more, or do they make less profit per burrito? And that's a decision that they're going to be looking at, and menu price increases are definitely going to be on the table. Again, same with Google. This decrease in the share price gets me back into the I'm interested camp, especially when you see the potential for European expansion and the expansion of their Asian concept, Shop House, which is going to open their second and third one, the third one in California coming up. If you could show me a situation where I can get the Shop House franchise for free potentially or something like that, that gets me really interested.
What is your go-to burrito, Ron?
I'm a chicken person by nature. The spicy salsa, it's the not the chunky one.
Got it. Yeah.
Not no guac.
Not no guac or no guac?
No guac.
No guac.
Yeah.
Okay.
Sticking with restaurants, McDonald's profits came in lower than expected. James, this is the second quarter in a row this has happened, and to the point Ron was making about same-store sales, McDonald's, in their earnings statement, said that looking ahead to the next quarter, that global same-store sales are trending negative. So that's not, hey, the comps are lower. It's the comps are lower to the point where they're trending negative.
Yeah, it's I was a little bit surprised by that, Chris. This has been a company that's sort of a victim of its own success in a way. It's done so well, and it's kind of like, now nobody wants to give you credit for all the times you do brush your teeth, but they are, to their credit, they are spending a lot of money.
Means.
I guess I don't know either. What I just made that up. They're about halfway done with their store remodelings in the U.S., and that's been a big focus for them because fast casual was eat their lunch, but fast casual is taking some of their business, and so they're sort of sprucing up their stores. That's a long-term thing. So I think, you're right. They just have to ride it out for now. So
long-term, you're not necessarily worried about McDonald's, either the company or the stock, where it's going?
The stock is not crazy cheap now. Long-term, I'm not worried.
Microsoft's first quarter revenue fell 22%. Shares were down a bit on Friday as a result. Joe, is this due to the delay of Windows 8, as some in the media are reporting it, or do you think this is just sort of a larger trend in terms of PC sales overall?
Yeah, I don't think this was a Windows 8 thing. No one I know has been like, oh man, I'm holding off on buying that PC because Windows 8 is coming up around the corner. I'm not really hearing that.
No companies, no corporate buying delays as a result of something like that?
I am sure that is true, and pre-sales for Windows 8 are up 40% over
Can we hear that
the
again, by the way?
or maybe later against Windows 7. So that's true, but at the same time, I do think you're seeing a lot of enterprises extending the life of their PCs. In Full HQ, I'm running Word 2003 on my PC, and I don't see much reason for us to upgrade. The English language still just hammers out plenty fine on there, and all I'm trying to do is get to the internet most of the time, and that's part of the problem, is that PCs have reached a state where they are high quality enough where they can get me to the internet, where all the high value activity is happening, and Microsoft isn't really a big part of that.
I can't argue with a lot of that, although I do believe the cash flow that they do generate still makes the stock look inexpensive. One other thing that was maybe troubling is that their server and software business showed some weakness as well. They say it's because they've shifted the model into like long-term contracts, so you don't see the big pops when they launch things. But that's also something to keep an eye on because that's traditionally been a pretty strong business.
Yeah, I'm going to twist the knife a little bit because we've been doing a lot of apologizing for companies so far here. The online services business is also still hemorrhaging cash. So basically, online services is Bing.
Bing, bing, bing.
Yeah,
nice.
That about describes the
You
revenue.
guys remember Ricochet Rabbit when you were a kid? The cartoon?
Sure, yeah.
Okay. Bing, bing, bing.
Yeah.
This will come out in post-production.
I
Don't worry
know.
about that.
I want to go back to the PCs for a second because we saw earlier in the week Intel's third quarter earnings fell, and James, the CEO at Intel, went so far as to say, yeah, we're not really sure when PC sales are going to pick up. That, to me, is as damning a statement about the state of PC sales as anything going on with Microsoft.
Well, at least he's honest, Chris. Intel about a year ago was sort of surprisingly good. Now they're surprisingly bad. Long term, I'm not too worried. We still have a lot of emerging market consumers. We still have a lot of demand. Intel's obviously been losing to AMD on the smartphone chips because of power parity issues, but they are coming closer to that power parity. So I'm a long-term believer in Intel. Short-term is going to be rocky.
Coca-Cola and Pepsi both reporting earnings this week. And James, I know that you would sooner reach for a glass of sand before soda. But
you know me well, Chris.
but these are both recommendations.
Loves his roughage.
Yeah,
these are
fiber.
both recommendations in your service. What's the story with the big?
Well, the common theme, they both had 1% gains in sales volume overall, which is great. Decent results, especially overseas, but a stronger dollar meant that money didn't convert into as much U.S. currency when it was brought back over. It's sort of like the feeling of, I don't know, spitting into the wind and having it come back into your face or something like that. It's good, but it's just not not enough to bring the earnings where they need to be based on where expectations have been and where the stock prices have been. I think both of these guys are a little bit rich right now.
What do you think of Pepsi's marketing strategy? Because we were talking before the show today, and I can't recall a company as eager to talk about the money they are spending on marketing as Pepsi is. And to their credit, certainly over the last year or so, when you look at the stock performance, it seems to be paying off for them.
And Chris, Pepsi organic sales were up 5%. Organic, not organic food, just organic meaning ex-acquisition, were up 5%, which is actually really good. They gained market share over Coke. So I think it is working, but I agree with you. They do talk about it quite a bit.
Yeah, well, I think it's smart. Unlike Coke, they underinvested in their brand for a very long time, and I think Coke's eaten their lunch as a result. So even though it's expensive, I think it's a good long-term investment for them.
Coming up, if you're the CEO of a for-profit education company, you had a really bad week. Details next. This is Motley Fool Money. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. Welcome back to Motley Fool Money. Chris Hill here in studio with Joe Magert, James Early, and Ron Gross. Guys, bad week for the for-profit education industry. Bridgeport Education disclosed the U.S. Justice Department is investigating Bridgepoint's compensation structure, and Apollo Group's fourth quarter earnings fell 60%. Ron Gross, not surprisingly, both stocks down for the week.
Yeah, a lot.
Bridgepoint Education is a stock you've recommended.
And we continue to recommend it as a buy despite everything that's going on. And it's not necessarily because we think it's the best business in the world. Quite frankly, we just think it is cheap based on the amount of profits and cash flows they produce. The DOJ investigation, very light on details right now, but it has to do with their compensation practices. They've already taken steps to address that by actually letting go.
Enrolling real students?
Yes, they're real. But they've let go of 450 admissions staff, and they've reassigned another 400. So they're already, the writing was on the wall. They're already having accreditation problems. They already had to take steps, they literally had to save their business. So enrollment, just like with Apollo, is coming down kind of by design. As you get more strict in the students you accept, you got to tighten up the business. You see enrollment come down.
Joe, speaking of cheap, shares of Apollo Group trading at their lowest point in more than a decade.
Yeah, no thanks. This is one where, we bailed out on Apollo about a year ago when they had their first, what I would say, catastrophic drop in new enrollments. And similar to Bridgepoint, it was by design. And in fairness, they were just putting people in who shouldn't be there. But new enrollments are down 45% at Apollo over the last few years. That is pretty brutal, and I understand that you're trying to get better customers. Students in there. But clearly this model is broken, I would say, for a lot of these companies. And, Apollo itself is just doing some massive cost cutting that I think is ultimately going to hurt the educational experience. It's not just fat. So it's going to have a tough time in the next couple of years.
Shares of Johnson & Johnson hit an all-time high this week when third quarter earnings came in better than expected. James Early, what do you think?
Sometimes, Chris, there's magic in just not screwing up. J&J has for many years
now
exactly had these issues with recalls and the formaldehyde laden building shipping crates had crumbled into some of the children's medicines, things like that. They didn't really have it this time. Drugs actually sold well, and the Synthesis medical device company acquisition is looking good. And people don't realize that the consumer products, the one that had the division that had all these problems, has actually been smaller and smaller as a percent of J&J's revenues by design.
Vikram Pandit, the CEO at Citigroup for the past 5 years, resigned this week, kind of sent some shockwaves through Wall Street banks as a result of that. And Joe, as we talked about earlier in the week, not really that much of a surprise when you consider that shares of Citigroup down 89% during his tenure as CEO.
While JP Morgan's only down 5%.
Right. With that in mind, whether it's on Wall Street or elsewhere in the public markets, who is the new CEO on the hot seat in your estimation? Ron?
I think I'm going to offer an early retirement to John Chambers over at Cisco. I think Cisco has lost their way. Cloud computing, they didn't really have a strategy around mobile. They didn't really have a great strategy. They've gone under reorganization at least 3 times, and they still just can't seem to find their way. Stock's been decimated.
James?
I'm going to go with Brian Moynihan of Bank of America. Not a bad guy, but he's had some credibility issues, and the banking environment is sort of keeping him afloat now. But if it does take a turn for the worst, so will he.
Joe?
Steve Ballmer. Microsoft has missed the mobile boat so badly, and they've thrown so much money at it to no avail. I think if Windows 8 is a consumer flop, there's going to be a lot of pressure for him to be out.
All right, before we get to the stocks on our radar, I'm going to borrow something that Ron has done in the past. I'm going to wish my big sister happy birthday.
Nice.
An amazing older sister, and particularly when it comes to finances, because when I got my first real job out of college, she was the one who sat me down and said, this is what a 401k plan is. This is what you do. And I can't
What is Big Sis's name?
Marianne.
Happy birthday, Marianne.
And she listens to Motley Fool Money over the weekend when she goes for a run. She goes the podcast route, not the radio station route. We just got a couple of minutes left. Ron Gross, what is the stock on your radar this week?
I'm circling back around to a stock I talked about maybe 2 years ago, and it's Kemet, K-E-M. They're a very small cap manufacturer of electronic capacitors. Capacitors are little components used to store energy.
Sure, I saw Back to the Future.
Yeah, right. The flux capacitor.
Flux capacitor.
Exactly. These things are a commodity product, so that's one thing I'm concerned about. They sell for pennies, maybe up to a few dollars each, so you've got to sell a lot of them, but it looks really cheap. Discount to book value, very low multiple to cash flow, so I'm getting back interested in it.
Jim?
Chris, I'm feeling mushy today, maybe because I'm sitting next to Ron Gross and breathing his pheromones in, but I'm going to go with Disney.
Again, I don't know what that means.
Well, one reason I like Disney, it's not the cheapest stock, it's maybe fairly priced. Long term, I think it is a winner. I just came home from a conference and sat my business cards on the table. My son sees Mickey Mouse, just grabs a business card with Mickey Mouse on it, runs upstairs, and he's so excited. And he's 20 years old, too, which is weird. But, okay, yeah, he's 3. But the point is, brand is just really strong. Another reason, they have a whole division, I learned, that polices the supply chain for the factories that make their products. So I thought that's really nice of them to do. They don't even own the factories, but most of us don't know how our stuff is made, where it comes from, but and we just kind of throw our hands up. But Disney's not doing that. They're actually kind of aggressively monitoring this, and that's good for Disney.
Apple.
As a Disney shareholder, that actually makes me feel better about owning shares. Not that I felt bad, but that's always great to hear. The ticker symbol?
DIS.
DIS. Joe Mager, we got a minute left. What's the stock on your radar?
Sure, Mercado Libre. It's basically the eBay of Latin America. It's almost the exact same model where they do marketplaces and payments. It hasn't really been on my radar to date, usually because I don't look at Latin American hypergrowth stories. But the stock looks pretty interesting, partially because it's got a great balance sheet, partially because it's a good takeout candidate, but also it's just a really big growth story and they're doing nicely.
And the ticker symbol?
MELI.
What do you suppose the Motley Fool Money of Latin America is?
I have no idea.
Dinero I don't know.
Drop us an email, radio@fool.com, if you have any thoughts on the Motley Fool Money of Latin America, or more importantly, the Joe Mager of Latin America. All right, Joe, James Early, Ron Gross, guys, thanks for being here.
Thanks.
Thank you, Chris.